Why are the world's most powerful central banks quietly emptying Western vaults and moving massive amounts of gold to the east? While the public focuses on digital currencies, sovereign leaders are preparing for a fractured monetary future. Is this the end of dollar dominance, or the birth of a new gold-backed era? For decades, the global financial system revolved around one thing: trust in the US dollar. But behind closed doors, something extraordinary is happening. Central banks are buying gold at the fastest pace in over 50 years. Nations once dependent on the Western banking system are now racing to secure physical bullion, not paper promises, not crypto speculation, real gold. And the most shocking part? Most ordinary people have no idea this monetary shift is already underway. Tonight, we uncover the silent global gold rush, the weakening foundations of the petrodollar, and why the world's financial elites may already be preparing for a post-dollar future. The years 2024 and 2025 marked a historic turning point in global finance. Central banks across the world began accumulating gold at record-breaking levels, reaching buying volumes not seen since the Cold War era. Countries that rarely spoke publicly about reserve strategies suddenly became aggressive buyers in the international bullion market. China expanded its gold reserves. India accelerated purchases. Russia continued stacking despite sanctions. Turkey, Poland, and several Middle Eastern nations also joined the race. But publicly, governments kept talking about something else entirely: digital currencies, CBDCs, cashless systems, blockchain settlement networks. The media narrative focused on the future becoming digital, but behind that narrative, sovereign institutions were quietly hoarding one of the oldest forms of money in human history. Why? Because recent geopolitical events shattered a core assumption of the modern financial system. For decades, countries believed their foreign reserves were untouchable. But when major powers witnessed overseas assets frozen during geopolitical conflicts, panic spread through central banks worldwide. Suddenly, leaders realized something terrifying. If reserves held in foreign currencies could be frozen, then wealth stored inside another nation's financial system was no longer truly sovereign. That changed everything. Gold became attractive again because it carries no counterparty risk. No government can print it overnight. No central bank can digitally erase it. And no foreign power can freeze it if you physically control it yourself. This was no longer just about investment returns. It was about survival. To understand why gold matters now, we need to understand the system it threatens. For over half a century, the US dollar dominated global trade through the petrodollar system. Oil transactions worldwide were priced mainly in dollars. Countries needed dollars to buy energy. And because nations constantly needed dollars, global demand for US Treasury bonds remained extremely strong. This gave America enormous power, the ability to borrow cheaply, to run massive deficits, and to influence global markets through monetary policy. But cracks have started to appear. Several major energy agreements that reinforced dollar dominance began weakening in the 2020s. At the same time, BRICS plus nations accelerated efforts to trade directly in their own currencies. China and Russia expanded yuan-based energy transactions. India negotiated bilateral trade settlements outside the dollar system. Middle Eastern producers began exploring non-dollar payment mechanisms. The implications are massive. If global trade slowly shifts away from the dollar, demand for US debt could weaken over time. And if confidence in sovereign currencies declines, nations need another reserve asset everyone can trust. That asset is gold. Unlike fiat currency, gold belongs to no government. It is politically neutral. It has survived empires, wars, depressions, and monetary collapses for thousands of years. In a fragmented world, divided into competing economic blocks, gold becomes the bridge asset, the one form of reserve wealth that every nation recognizes. But this transformation goes far beyond simply buying gold. Behind the scenes, countries are building entirely new financial infrastructure around it. Several Eastern financial institutions are now experimenting with gold-backed settlement systems and commodity-linked payment networks. The goal is not necessarily to return to a traditional gold standard, but to create systems where physical assets support trust between nations. And while the public debates cryptocurrency volatility, Governments are preparing hybrid systems that combine digital technology with tangible reserves. At the same time, another quiet movement is accelerating: gold repatriation. Countries are physically bringing their bullion home. For decades, many nations stored gold inside vaults located in New York or London. But now, governments increasingly want direct possession of their reserves. Germany repatriated significant amounts of gold years ago. Other countries followed with similar strategies. Why? Because possession matters during instability. If a global financial fracture occurs, physical control over reserves could become one of the most important strategic advantages a nation can have. And there's another reason gold is becoming so critical: debt. Global debt levels have exploded to historic highs. Inflation pressures continue destabilizing economies, and confidence in fiat purchasing power keeps eroding. Historically, monetary systems overloaded with debt often reset through devaluation, restructuring, or systemic transition. Gold acts as insurance during those moments, a reset button for trust. Emerging economies understand this better than most. Many nations no longer view Western sovereign bonds as completely risk-free assets. Instead, they increasingly see tangible reserves as a form of geopolitical protection. Gold cannot be sanctioned the same way foreign debt instruments can. It cannot default, and it doesn't rely on another government's fiscal discipline. That's why central banks in China, Russia, India, Turkey, and several Gulf nations continue increasing their exposure to physical bullion. Interestingly, many of these institutions remain unusually secretive about their long-term reserve targets. Why the silence? Because openly announcing aggressive accumulation could destabilize markets and accelerate the very transition they are preparing for. And there's a deeper pattern emerging. As global tensions rise, gold reserves rise too. The decline in global peace and stability has historically correlated with increased central bank gold ownership. Periods of uncertainty push nations toward assets that can survive geopolitical fragmentation. Gold is no longer viewed as a relic. It is increasingly viewed as strategic insurance, not against one crisis, but against systemic transformation itself. So what happens next? The most likely future may not be a complete collapse of the dollar overnight. Instead, the world could gradually shift into a multi-currency system, a fragmented financial order where different regional blocks use different trade currencies, while gold acts as the neutral settlement layer between them. In that world, nations with large gold reserves gain leverage. Trust becomes partially anchored to tangible assets again, and private investors are watching closely. Because historically, when central banks aggressively accumulate an asset, they usually see long-term strategic value before the public does. The so-called smart money isn't just hedge funds anymore. It's sovereign institutions. And they are moving carefully, quietly, strategically. The current monetary cycle may still have years left, but many analysts believe the transition phase has already begun. Not with headlines, not with sudden collapse, but through slow structural shifts happening beneath the surface of the global economy. And by the time the public fully realizes what's changing, the global monetary system is entering one of the most uncertain periods in modern history. And while politicians debate inflation, debt, and digital currencies, central banks are making their own decision in silence. They're buying gold. So the real question is, what do they know that the public doesn't? If you enjoyed this deep dive into hidden global realities, make sure to like this video, subscribe, and turn on notifications for more cinematic investigations into the forces reshaping our world. Because the next financial era may already be unfolding right in front of us.